Hey, what's going on, everybody? How's it going? Uh, markets just made new highs, so things are starting to recover in a very, very nice fashion. Uh, ladies and gentlemen, let's start with why we're selling off. Okay, so I think most people realize that a lot of this is attributed to the 10-year yields and the 20-year yields starting to spike very aggressively. This morning, the 10-year yields actually almost touched 4.9% and has pulled back quite a bit. So you could see that in turn, the 10-year futures um, contract is starting to rally and gain a little bit of strength. Now, this is really important because this cross correlates with the performance in the markets. This is really important. So if yields start rolling back here, we're going to see a nice uptick in the markets. We're long overdue for this rally, and that's going to be very big. Now, the reason why I mentioned in 2021, and I'll bring us back to the SPX during that time frame. Let's go back. Let's go back on the weekly chart here, okay? So looking back at that time frame, we saw a lot of really crazy, weakness and like kind of market activity take place into 2021, spilling into 2022, and then we spent 2023 recovering. So, is this going to be the earmark of the all uptrend, or are we going to see the fallout for the 2022 volatility? Now, the reason why I'm talking about what we're recognizing here is that we're seeing a little bit of a retraction. Now, I want you folks to not be overly concerned, okay? And at this point, I really can't pull this up really quick. I don't want you to be overly concerned. What the key factor in all of this is, quite respectfully, is that we will see the markets position themselves anywhere from this like 3 to 6 week time frame at the start of the year. And with that start of the calendar year, uh, there's no determining factor on if we're going to continually go down or continually go up. We're seeing Wall Street position themselves for the first quarter and beyond for 2025. So, for those that are a bit worried about the sky is falling, certainly the yields are having a major effect to that. But, unless we start really spiking and seeing volatility spiking crazy, then at this point, we're just going to deal with some really aggressive swings here, but it's probably going to balance out and we're probably going to continue our trend up. And so the reason why I brought up 2021 is that we saw a few bouts of volatility at the start of that year. And then all of a sudden, we started breaking really north and having a really continuous run. In 2022, when the crazy volatility took place, we spilled throughout January, we spilled and recovered in February, and then we started the real downtick in March, and things got really ugly until probably the end of October. So it's too early to say this is going to be a bearish year, bearish context, bearish overall follow through. And we're going to kind of see a bit of balancing, see some swings, and with the eventual break, whether it's going to be north or south, really being finalized sometime around mid February. In the meantime, embrace the volatility, keep things short term. There's no need to hold long term if there's really big movements in the short term. But when you trade volatility, you're always looking at extremes, buy the extreme lows, short the extreme highs, and vice versa. So hopefully that makes a lot of sense here, everybody. Let's see. Hello, hello. Not seeing your chart. Okay, so the chart is up now. And so let's go back to the 10-year really quick. I want to show you what the 10-year is. And for those that are on Thinkorswim, you could just type in /ZN And as you can see, we're not cratered to where we were earlier. Um, when let me see, sorry, pull this back up to the daily chart. We're not cratered to the 5-year lows. We are actually approaching the 52-week lows. And what's really interesting is whether we could find the support at this 52-week low. And if we are able to, that certainly will give us a lot more guidance that we're in for a really strong rebound. And of course, we're going to see the yields kind of temper out. It's really important that we see the 20-year yields slide underneath 5%. And we definitely need to see that 10-year yield stay below 5%. I believe that panic could start really triggering once that 5% threshold is breached and we remain above that um, that key kind of psychological level. Now, in relation to us rallying, obviously tech's going to be big, but housing is going to be on watch. And this next stock, which I'm going to pull up here, is really important for us to pay attention to. Lululemon. Now, they've had some kind of back and forth trading. They're swinging right now. In pre market, they traded as high as $423, which, if they would open at that level, would have actually pushed them past this key resistance point. And this resistance point is really important because that's the only thing that's standing in the way between this. This is what's known as a pretty significant profit pocket. At the top of this box, it is what's known as the gap fill. Okay. So, does everybody know what it means when a stock goes to fill the gap? Let me know in the comments, everybody. If you understand this concept of filling the gap, then you understand that there is great upside potential for a stock like Lulu in the very near term. Now, Lulu today was moving higher because of their fourth quarter sales guidance. The numbers came in really strong, so people showed out for the holidays. And right when people were saying, man, maybe the hype on Lulu, maybe they're overstretched, and the growth story is, kind of in the pooper." Now we're only facilitating the idea that Lulu is getting back to the powerhouse that they used to be in terms of the retail sector. Whereas A&F today has gone in the total opposite direction. That's pretty funny because um, both Lulu and A&F actually announced better than expected numbers. They both raised guidance, except that one went down $31 and the other one, well, it was up quite a bit. And obviously the market pullback um, help bring this stock back into reality. But if they are able to push, this 420-ish price range is going to be important. For those that are wondering, I'm going to erase this. The gap fill is going to be the closing price of March 21st, the day prior to earnings. That's at 478.84. So if you just do the math, we're talking about nearly $80 upside here in the near term. And I told you you have potential to make $80 in a stock. How many of you would not like that? Of course, everybody's going to be interested. So that 420 is going to be a really important price. You've seen how strong the recovery has been. I've been, beating the drum on this stock for quite some time. For those that have been in my room, you understand my feelings on Lulu. And certainly, this is one of those names that has great upside momentum and still has the capability that's very transparent to the markets of making this really accelerated jump. So you could see that the knockback early in in pre-market trading certainly carried into the open, but buyers have jumped back in, bouncing it at the 20 SMA. So the stock is now bouncing off of short-term indicators on the daily chart, which really represents really strong demand for that name. So let's see if what's going to happen. But this has screaming potential up to that 480-ish price range. Now, I'll briefly talk about A&F here. Abercrombie and Fitch, they were down 31 plus dollars. You could see where they've held. It was right at that $28 price. And that $28 price was based on this key support level. Now, their chart is horrifically ugly to say the least, but that was the September 10th low at 128.07. You've seen that they've kind of stair stepped up in terms of support until just today, where they sliced through that 131 but stopped at that 128. As of right now, they have also defended it on the 5 minute chart here. And there could be a potential uptick if the markets continue to rise and the stock really pushes beyond 134, because you can see above 134, there's a lot of room for the stock to move here without much obstruction. And that's key. What chart is that? My chart on the left is the chart that I use in my Momo room, which is a bit ugly, but the chart on the right is just the EMAs and the crossovers here. Um, Clive says, please explain. I'm not sure what that was in reference. If that was in reference to what a gap fill is, all right. So let me just quickly and briefly break it down. The gap is the difference, okay, between where a stock closes and where it opens the following day. And usually, when it's a significant difference, as it was in this instance, I believe Lulu dropped like 60, $70. It's usually attributed to two things: news or fundamentals. Fundamentals would generally be on earnings. And so when a stock recovers or rolls back, it depends on which way they gapped. In this instance, they gapped down. Once a stock starts exceeding a specific threshold, this 420 price, if you're wondering, is tied to the highs of the day that they gap down. And those gap bar highs and lows tend to be really important barriers, because that usually is that last line of defense between this and what's known as the gap fill. The gap fill is a projectable recovery or a reversion back to where it came from historically. And because of this, they're visually representing what's known as an extremely transparent target. In this instance, this would be a target for the buyers if we could get above 420, because there's nothing, if you take a look here, Clive, that's standing in the way between 420 and that price. There's no technical indicator. There's just nothing but open space, so to speak, because of that gap. And because of that very transparent upside target, sellers recognize that if they're going to have any chance of success in fading this stock down, they can't allow it to get above 420. So, this, in my opinion, is going to be a really, really important threshold for this stock to break out from, because once it does, again, it signals that they're pushing for the gap fill, which is at that point right around $60 higher. And buyers know this, sellers know this. Sellers tend to stay away, buyers tend to pile in anticipation of a recovery. Are we doing a word of the day today? Why not, folks? Why not? So, if you wish to be in the drawing, let's do this, Michael. If you wish to be in the drawing today, type in these four letters, ladies and gentlemen. Let's see if you could see this on my screen. The word of the day is Lulu. How's that for you, folks? Lulu. So, if you want to take part in our drawing today, type in the word Lulu in the chat. As well, do me a favor, folks. A lot of you will tune in, like the content, but won't like the video. So if you're watching on YouTube or any of our other streams, do me a favor, like our content. On YouTube, it'd be a thumbs up, and some other social medias, it's a click of the like button or it's a click of the heart icon. Do me a favor, click on that just this time for us. We would greatly appreciate it. Now let's talk to a retail favorite, Palantir, PLTR, the once impenetrable and unfadable stock is breaking down significantly. And one of the things that the last time I was on a Market Minds episode, not the one where I was on with Scott and Mike, but the last one that I had hosted, I had talked about how you could see signs that a stock is due to reverse. And this was, whoops, that's too big of a box border. This is a key sign. This is where the stock closed and opened below the faster moving averages, the 10 EMA and the 20 SMA. And what that generally means is that once they reject, they're going to work down towards that 50 SMA. And that's where you'll usually see, right, demand pick right back up for the stock. However, Palantir opened below this level and actually used that range as, short-term resistance. So now we're looking at a projectable downside of 61. And then after that, somewhere around 50 to $52. Okay. So this is something that you're going to keep a very, very close eye on with Palantir. The 2 points of emphasis is 61.36, but I actually think it's going to be more towards this range. Now, that being said, if we look right here, this puts us right around the threshold of the 50% retracement from where the stock had broken out from to the peak. That's around the 50% mark. Okay. And so if we look around that 50% mark, we should be looking for a rebound. For me, we can't create a bullish case for Palantir until not only recovers above this threshold, but it recovers above this threshold. So I understand that it's going to be very easy and Palantir is very attractive to buy on the dip, but this is also going to be assuming that there's not much more downside that this stock could have. And I got to tell you right now, there is plenty of downside for this stock to retrace. So keep a very, very close eye on PLTR. And again, folks, if you happen to like the content, do me a favor, click on that like button. I want to see the likes hitting all-time highs, even if our viewer count isn't the same. Now, we do have a few minutes. I went through everything fairly quickly. Does anybody have any questions about stocks that they want to talk about? Like, for example, I want to bring up Apple very quickly. And if you have a ticker, fire it away in the chat. Apple is also another stock, if you've noticed, that was on a breakaway rebound and rally. And then all of a sudden, folks, they have not only gone straight down, but they have gone past from where they have broken out from. So that is just screaming major weakness, and maybe that's attributed to iPhone sales. No matter what had occurred with Foxconn, and Foxconn, by the way, is a major manufacturer for Apple. Even though they had strong numbers and strong guidance, for whatever reason, Wall Street is really pounding Apple into the dirt here over the last few weeks. And at the start of the year, I believe Apple's only had like one or two up days for 2025. Thinking Tesla's a good fade. Sure. I actually, from a day trading standpoint, I could see that. I love Tesla's recovery here. And I think that there's a potential that Tesla could shoot this profit pocket up to 423. Now, this is going to be in question. There is a bit of a wedge pattern that's starting to take place, but the way that Tesla has performed today really showcased that there's a lot of demand, and as well that the short-term bears may be looking to cover their position ahead of earnings, as Tesla is going to be reporting earnings very shortly. All right, so Clive mentioned TWLO and I've seen Mongo. So let's start with Mongo, MDB. MDB has actually been on my AI programs watch list. I mentioned them today. I wanted to see them come back to around this 231 to 232 price and hold this level. What's really critical is that MongoDB is facing a lot of suppression. And anytime that we see a sign of recovery, we need to see the stock really push through and above these short-term moving averages. So uh, I would look to this range to start that rebound that creates a higher low, which is in a range of demand and accumulation. And two, once it recovers above that 20 SMA, we could see a lot of acceleration. I mean, we're talking about in the range around 20 to 30 points upside, and if it really gains great momentum, we're talking about in the range of 50 to 70 point upside. The major gap to fill here is at 350, which is 120, or sorry, $113 away. But that's not going to happen anytime soon. I would start thinking about that gap fill once we recover above the 200-day moving average. And we're far, far away from that level. So we'll have to wait and see. TWLO is also one of those stocks that was just on a absolute breakout. They're in a consolidation mode. They're not quote unquote completely set to unravel just yet, but they could if they get below 103. 103 really opens the door for them to start breaking down to these key thresholds and looking very similar to Palantir. Now, should you be concerned? I'm going to be very honest with you. Yes, because if you look at how Twilio has performed there, and then you look at how Twilio is behaving now, those are not the same participants. It's not the same sentiment, nor is it the same demand. And usually, when stocks get a little top heavy, well, once it stops going up, it starts going sideways. And then the eventual move is if they don't break out north, they're going to be breaking down south. So, again, folks, if you are wanting to be a part of the quote unquote giveaway, do me a favor, type in the ticker symbol Lulu so you could be included. We are, Michael, how many more minutes you want to do this? Maybe just a couple more. Someone mentioned AMD. So now I actually talked about AMD a lot this morning in the AI room. Folks, AMD is at a critical make or break moment. Michael says you guys have about 6 minutes, 6 minutes, folks, to get on that giveaway or get on that wheel. AMD is touching up on the 200 SMA on the weekly chart. This is the only thing between AMD getting crushed below $100 and rebounding. That box is what's known as a profit pocket. If you don't know what that means, folks, that means that if they lose this level, there's no reference point to slow it down. That means that they could tumble all the way back down to that shaded area or the bottom of that yellow box. But if you notice right now, last week's last week's candle, this current candle is trying to bounce off of that key threshold. So if they're able to maintain that level, I would say it's right around 114, then we should be looking for a short-term rebound. I'd say that there's a stock that's reporting on Thursday morning that's going to play a very significant role for the semiconductor sector this week and possibly going forward. And that's TSM. They're going to be reporting their earnings. And in fact, their earnings could be even more important than NVIDIA's. So right now, AMD did make a new 52-week low at 114.40. They got to hold this level. If they do, the recovery is back to 121. And then anything after that, if they get pushed beyond the 20 SMA, it's probably up towards 127, 132, with the chance that we could actually see a lot more follow through and really work towards 150 in the very near term. Can you explain the gap one more time? The gap is the difference between the closing price and the opening price overnight. Okay. When if it's 10 cents, listen, I wouldn't care about it. We're talking about a significant difference. So if you want to take a look here, this is the closing price for AMD. This is where it opened. Now, anywhere on this chart that has AMD done anything like this? The answer is no. So the big difference, right, between where it closes and where it opens is the gap in pricing. You see that? So it's the large difference between the closing price and the following day's open. I like the dip to rip idea, folks. Let's see where the Qs are right now. What is the Nasdaq doing? Oh, final call to get on the swag wheel. Yeah, we're trading at the highs. We're holding steady, but we're not really breaking out. We still need to push here. Let's see if we could get that push. Good accept. If we could get acceptance here, there's a possibility the Qs could trade as high as 507 today. The VIX did actually go negative here just briefly. Pretty crazy because the SPX is still down for the day. The Nasdaq obviously is down big, and the VIX tracks the S&P 500. But fact remains that the VIX went negative while the S&P went negative. Usually points to a sign that the market wants to reverse up. All right, folks. I don't see any other tickers, but I appreciate you, Paul. The man. um, again, final thoughts. A lot of people feel that this is overblown. Remember, this is the market reacting to the bond market. And for those that don't know, the liquidity in the bond market is very significant. The bond market has always been a signal on the health of the markets. And, in 2022, the yields went wild, and the yields right now are starting to get wild right now. So when we balance out, if we can get the yields to balance out a bit, that's going to help facilitate a big rally. Especially if institutions believe that we have a lot more upside to go, especially under the new administration. Ladies and gentlemen, remember this is the beginning of the year. These breakouts that are going to occur are going to be, they're not going to be small. They're not going to be short term. They're going to be really, really large and sustainable. We saw it happen in 2021. I would love that breakout to occur. Obviously, that came on the heels of COVID, but 2023 was no joke. 2024 was no joke. As long as we could avoid the volatility mess of 2022, we'll be fine. I think there are some positive signs that we are seeing that is pointing to a repeat potentially here of 2021. Okay, so folks, you've been waiting for this. I don't know, man. There's no percentage. It's a large discrepancy. It's larger than normal. It's usually after earnings. So think about it like this, okay? If it's 50 cents or a dollar, it's nothing to warrant. It's nothing of interest. And no offense, guys, we're coming to the end of the episode. Do me a favor. If you want to learn about cap fills, all you have to do is actually Google it. But it's something that is very significant and becomes a very attractive target. So if 3 points is attractive to you, it's not going to be attractive to the broad majority of the markets. And in fact, if I told you, would you rather go for a 3 point target or an 80 point target? I don't think anybody's going to say 3 points. Everybody's going to say, I want 80 points upside. So that is what you're looking for, a significant difference between the closing price. Okay. Folks, Let's see who's our big winner today. Oh God, it's this guy. Listen, I swear to you, folks. I swear to you. Okay, I swear to you. I didn't pay him off to say to join the room, and then he ended up winning. Congrats to Paul. Congrats to Paul. And folks, I want to say thank you. Thank you very much for your participation. With Scott out this week, it's going to be a pretty interesting bag for Market Minds. Tomorrow, you have the great Michael Shore taking over. He's going to be running the show. I'll be back Wednesday. Mike will be back Thursday. And then on Friday, you get two knuckleheads, both him and I, at the same time to finish off the week. So, with that, ladies and gentlemen, hopefully we see a nice finish to the day. Keep an eye on Apple. Keep an eye on Tesla for the breakout. Maybe even keep an eye on Lulu and they can make that push. Just want to say peace and love. Take care. And until next time, I'll see you then.